Hi, I'm Chris Hawkes, the president of E-Tax Relief. In this clip, we're going to be discussing IRS levies and how they may have an effect on you. Did you just receive your paycheck and find out that your payday went up in smoke? Has the IRS left you enough money to pay the mortgage or for gas to drive to and from work? Call us now to put a stop to wage garnishments and bank levies. A wage garnishment is a levy that is a legal seizure of your property to satisfy a tax debt. Levies are different from liens. A lien is a claim used as security for the tax debt, while a levy actually takes the property to satisfy the tax debt. If you do not pay your taxes or make arrangements to settle your debt, the IRS may garnish your wages and or seize and sell various types of real and or personal property that you own. For instance, the IRS could seize and sell property that you hold. This could be your car, your boat, rental property, or even your home. They could also levy property that is yours but is held by someone else. This is going to include your wages, your retirement accounts, dividends, your bank accounts, licenses, rental income, and even accounts receivable. If the IRS files a levy on your bank account, your bank must hold funds you have on deposit up to the amount you owe for 21 days. This holding period allows for time to resolve any issues that may result in a release of that levy. After 21 days, however, the bank must send the money, plus interest if it applies, to the IRS. When it comes to bank levies, you have absolutely no time to waste. We may be able to help you get it released, but you will have to act fast. Call us toll-free, 888-744-7171. Now, the IRS should only levy after 3 requirements have been met. 1. They have assessed the tax and sent you a notice and demand for payment. 2. You neglected or refused to pay the tax. And 3. They sent you what's called a final notice of intent to levy and notice of your right to a hearing. The IRS must send this notice at least 30 days before they take levy action for any period they take levy action on. They can give you this notice in person, leave it at your home or your usual place of business, or send it to your last known address by certified or registered mail, return receipt requested. Please note, the courts have ruled that you do not have to actually sign the certified mail for it to be enforceable. The IRS meets its requirements as prescribed under the law merely by sending the notice via certified mail to the last known address of the taxpayer. You have the right to a hearing upon issuance of this notice. You may ask an IRS manager to review your case, or you may request what is called a collection due process hearing with the Office of Appeals by filing a Form 12153, Request for a Collection Due Process Hearing. This request must be sent to the IRS office listed on your notice. You must file your request within 30 days of the date on that notice. If your request is late, you may still be granted what's called an equivalent hearing, but you will lose your right to the statutory hold against collection action pending your hearing. Some of the issues you may bring up include: you paid all you owed before the IRS sent you the levy notice. The IRS assessed the tax and sent the levy notice when you were in bankruptcy and subject to the automatic stay during that bankruptcy. The IRS made a procedural error in its assessment. The time to collect the tax, called the statute of limitations, expired before the IRS sent the levy notice. You did not have an opportunity to dispute the assessed liability. You wish to discuss the collection options, or you wish to make a spousal defense. At the conclusion of your hearing, the Office of Appeals will issue a determination. You will have 30 days after the determination date to bring a suit to contest the determination. If your property is seized, levied, you should contact the IRS employee who took the action. You may also ask the manager to review your case. If the matter is still unresolved, the manager can explain your rights to appeal to the Office of Appeals.